Marin Katusa, thanks so much for coming on again on Wall Street Unplugged. What's up, man?
It's my pleasure, buddy. Not too much.
Well, you got a lot going on, including a new book, which we're going to get to in a little while. But I wanted to have you on because you know all the gold bugs, right? You've been doing this all your life. I know them as well. I was never really an inflation guy. I never really saw the inflation. That argument's been around for such a long time. Yet, if you're looking at the numbers over the past month and a half, they've gotten really scary. Like the CPI is through the roof, and CPI is the gauge that America created to not ever show inflation, right? So that's the one that the Fed looks at, and that's even showing inflation. Everybody's raising prices across the board here. It's nuts. What are your thoughts on how this impacts gold? Is gold finally here? Is that the best way to play this? But I want to get your thoughts on it.
As I've been writing, we're going to be in an area what I call crossflation. And you're seeing some massive inflationary pressures and, simple things like copper, lumber, certain commodities are just exploding right now. And from our perspective, when you would come with me some of these sites and I'd be talking about why copper is so critical, and 2-3 years ago, no one cared. Now when these stocks go up, one stock that we wrote up in August was $1.50. It hit $13 the other day. You have to take money off the table. So I'm getting a little uncomfortable with these inflationary pressures because there's no shortage of copper at $5 copper. That's just a fact. You're looking at lumber. I think lumber's got a lot of pent up demand, and manufacturing was kind of pulled back. And the sawmills, you look at what happened in that whole echo period. Many of the sawmills in BC just, shut down, and, the Pacific Northwest, they weren't ready for this massive demand. One thing about our markets is it'll always find a way eventually to meet demand. So that's been proven historically. It'll prove forward. So talking about gold, there's this narrative that we need higher gold prices, and although I wouldn't argue with that, my point is you can find incredible free cash flows. We're at 1885 gold. Like, this is stuff that we dreamed about 5 years ago, Frank. These are incredible value, and yet some of these very big companies are trading at 0.5 times NAV using $1,400 gold. At $1,500 gold, they're trading less than half NAV. So why would I take these risks in a market where, chasing this new commodity that are new companies that are nowhere near getting their permits and risky areas that I'm avoiding? What I'm looking at is true value, and the gold market right now is very compelling.
You bring up a great point when it comes to the large caps, right? In this industry where they're dirt cheap and they're growing tremendously, cash flow's never been positive. More positive, the amount of money that these guys are generating. Also, they produce a lot of copper, right? Which I feel like is not even on the books for them, or not even being modeled right now by the analysts, the sell side analysts. Now, do you think that with the amount of money that they're making and your experience in junior miners, because we do have a shortage of gold, don't we? I mean, it seems like there wasn't a lot of drilling for a very, very long time, but there are some junior miner projects that are really great that specifically, and there's not a lot of them. Are you even venturing into that? Or you're like, you know what, it's not even worth it, like you said, and let me just stick to the large guys because we could generate a lot of money, and the risk, on a risk-adjusted basis, it's really the thing to do, right?
Look, some of the companies that I have financed have had incredible runs here, and at that point, you take money off the table. It's not that I don't believe in management. It's not that I don't believe in the project, but if something goes from, $100 million market cap to $1 billion, and those catalysts of, hey, they've made a big discovery here, then the reality portion comes in: permits, feasibility study. We got to go raise the money to build this, and we got to go build it, right? So the big gains have been made in a lot of these juniors. Now they got to do the real stuff to get to that next level. But now, if I look at that next level of these free cash flow companies, they're trading at such big discounts that why do I need to go? Look, it goes back to the uranium days when people would talk about, oh, let's go look for uranium. And I said, why? When you can go buy permitted built things for a third of the cost it would cost to build it. So why take that risk on? And then you still get a 4 or 5 bagger out of it. I get that everyone loves financing a geologist with a dream and a box of crayons, but generally that ends in misery.
You're bringing up uranium. You've been bullish in uranium. You've got me in some deals with uranium a long time ago, and it took longer than expected, but we had 5-year warrants on a lot of these things. What's your view on uranium now? Because for me, I took half off the table, which, was very, very good. And I was a little early. I did about 3-4 months ago. But the reason why I took half off the table is because we know the fundamentals. We know there's huge demand. We know there's not enough supply. Electricity companies are going to come out. They're going to have to buy, but they're not buying for some reason, and the prices aren't going higher right now. They're going higher just by a little bit, which surprises me. So I said, you know what? Let me take half off the table. What is your view on uranium? Because I know you're invested in a lot of these things. Is it the same thing? Hey, these things have run up a lot. You got to take some off the table, or do you think, hey, this is just the beginning of another bull run?
So I actually don't have that many uranium investments, but the ones that I do have are very large positions. Now, I haven't sold any of my position. We recently put out a Katusa free ride on 2 of them. And same thing, the subscribers were in. They've got 300-400% gains. Nothing wrong with taking some cash off the table and having cash to deploy when the opportunity arises. That's how you're successful in this game. For myself personally, I don't think anything's changed in the uranium market. Spot's still $30 per pound. Other than the material coming out of the former Soviet Union, not even the Athabasca Basin in Canada can make money at that number, right? So again, be super selective. I don't think anything's changed in the near term, and stick with the best teams that have world-class assets that are in politically stable jurisdictions. Like, I have zero interest in putting any uranium dollars in an area where, you got to hire security to get to your project. Been there, done that. And here's the flat out truth, guys. It rarely ever works out.
What's your opinion on Northern Dynasty? That's a company that we both share, and we did incredibly, incredibly well because we're just so undervalued. And when you took me on that trip, I think it was like 35 cents. And, before we went, I'm like, I really didn't have high expectations for the company. And then we had a management team, Ron Thiessen, and all these guys, and we realized a lot of it was just BS, all the environmental concerns. And we came back, and everyone was kind of laughing at us at dinner, right? When everyone said, who's the best stock pick? What's the best stock pick you have? Went to a pretty big dinner, a lot of analysts there. And they were laughing at us. And we said, look, this is pretty big. And I think it went up 900%, 1,000%. But now you're seeing, the political stuff. And I'm bringing that up because you just mentioned, like, I'm not going to bother with, going any place that I have to protect myself as guns or whatever. But is that something that you've looked at lately? Because I always get a lot of questions on it. For me, I've avoided it because why deal with that concern when there's so many other good names in the space that you can go into? And it sucks because they do have a good management team, and a lot of that seems like BS to me. It doesn't seem, it is BS, a lot of the environmental concerns.
The interesting thing, I think that project would have done a lot better if Trump actually never did win. Ironically, because of that, though, it got a huge catalytic push in share price because of it. The shorters came on and did the whole, discredit, not needing to use facts. I fought it. We made huge money on it. But I did exactly what I told my subscribers. We took money off the table there, and then we eventually sold. That is a management team that are exceptional, but they will have some serious forces against them moving forward. There's ways to make it work moving forward. And the reason why I'm not buying it right now is it's in that legal bind period where it's going to be lawyers going back and forth. And I generally don't like spending time with lawyers. And that's kind of where I'm at with it. The deposit should be mined. It will be mined. The question is when and by who. You don't find pebbles very often. The last world-class discovery like a pebble was one that, you were there in the early days. It started here in my office in Vancouver. It's called Solaris. And Richard Wark and the team that they've done on that. I remember when it was 50 cents and my subscribers got it at 50 cents a share. It's $12, $13 right now in the market. It's been, 20 years from a Solaris to a pebble. You don't find world-class, multi-billion ton, high-grade deposits annually. That happens once a decade. So eventually when the world electrifies and America gets there, technology will bring that into production. It's just, I think right now, just sit back and see. But when it's time, that's a monster.
So, Marin, let me know what a day in the life of Marin Katusa is these days, because usually when I have you on the podcast, you're fired up, ready to go. Now you're like nice and calm and happy. You seem like everything's going real well. Do you still get a lot of deals that cross your desk and you're just like, listen, I'm not involved, so it's not as stressful. And you're like, look, I'm sticking with the major guys because there's more money to be made there. I have my positions already. I mean, what do you see in the marketplace? I mean, there's always people that want to get funded for everything, not just in your industry and resources in all industries. Even I get millions of calls and stuff. But what are you seeing these days in terms of, the funding and how you're reacting to that? Are you just, hey, everything's totally off the table when it comes to more speculative things? Or is it just, hey, because you do seem like you're a lot calmer, a lot nicer. I'm surprised, man.
That's just the beard. I think you're just more attracted to me right now. Look, I just put out a book. And, people wonder, why would you do it on May 25th? Frank, that was 9 years ago. I had open heart surgery. The first book was a result of staying at home. So I wrote a book in recovery that became a bestseller. And I have some really unique perspectives. And I've reached all my professional goals. I don't do things for a gain anymore. If I don't like the management team, my style. If I truly don't want to be around with these guys, I don't care if it's a quick double, triple, quadruple. I just won't play. I don't, I avoid FTDs, which are financially transmitted diseases. I just stick with the right guys, my Ross Beatties of the world, the Bob Quartermains of the world, the Amir Adanis of the world. I stick with good people. And there's a pattern that I've seen to these guys. You know them. Mm-hmm. And these are guys that, like the Jimmy O'Rourke. I've been partners with this guy for almost 20 years, and it's just a handshake. Olivier Garay. When I first started out, I worked with these guys, and I didn't even have an employment contract. It was a handshake deal. When we ran the funds, multi-big, like talking about a big fund, and we don't even have an employment contract. It's all just that's how I like to roll. You and I, it's a relationship thing. So where am I with that? This book was a very big endeavor. It's over 450 pages, and I've kind of built it all up to prove the math facts all the way. And then the forbidden chapter, which is the end, is probably the thing I'm most proud of in my career because I've done something that no one's ever done before. And my style, I love being the first to something. It's a way to feed my massive ego. And just the deals that I've done, I'm very happy. Like the last time I was on your show, I was in quarantine by myself for 2 weeks after being away from my family for a week. And I was writing the beginning of the book at that time, Frank. You lock me up into a place. I like to be productive. And I came up with the book. Life's good. Health is good. The portfolio is crushing it. We're doing so well. And I've stuck to my framework of I don't need to go to these super risky places to get big returns. I can actually invest in projects. Like I remember a big Serbian project that I was the first on, run by my very good friend. And we were vacationing at my place. This is even before I was married. I was single at the time. We'd be vacationing at my place on the water and we'd be talking about this project. And the market just had it totally misunderstood. Serbia, oh my God, is there a war going on there? And yet the people are loving. It's a great place to do business. And yet they're willing to give multi-billion-dollar market caps to an area that management can't even go without security and body armor. Like the world is so mispricing risk. And I talk about that in the book. I talk about in our markets today about how, coming risks to the market that nobody is talking about. So I guess to answer your question, Frank, this is a long winding way of I've been there, done it. I've kind of figured the game out. You pick right, you sit tight, follow the best people, and pick your windows. When things are cheap and no one's talking about it, load up. When it's popular, like copper today, or take your some money off the table. And don't forget about those beautiful 5-year Katusa warrants. There's a way of those paying multitudes down the road.
No, and I definitely generate some money off of that. So let's get to your book here. So it's The Rise of America. Surprising, right? I feel like, from resources and writing about everything, but this came as a surprise to me that you were writing this. I'm looking forward. So this is out, guys. You could actually buy this right now. Right? It came out yesterday. And talk about the book a little bit, because from what I gather, it's just, there's so much of a negative connotation when it comes to America right now, where just, the politics and the separation, all the stuff. And you say, listen, you got to ignore that because America is in a great position right here. Is that, I don't know if that's the quick recap, but let's hear it from you.
Yeah, like being Canadian, I get this, Trump did so much damage from, a non-American's perspective of America. You talk to the average Canadian, Australian, European, they think America is this backwards place, but yet they've not traveled through America. But yet they follow all of the American social media stars and want to live this American lifestyle, right? So there's so much misinformation out there, and I've never seen it so misguided. And, and I talk about during the height of the quarantine, and people are like, look how screwed up America is. And I'm like, wait, watch America. America does its best when its back is up against the wall. You go back throughout history, look at what America has survived. You look at what the American innovation has created, and then I break down into the demographics. I break it down into the economics. I break it down from a G2 world, what's going on. And, people think, oh my God, the dollar's trash. What do you want to buy? The won, the yen, the euro, the Canadian dollar? You ask yourself and going, geez, is there ever such information out there? People keep sending me data. Oh, but look at its debt. Have you looked at Canada's debt to GDP? Have you looked at the individual debt levels? Have you looked at the euro? What about the Japan? So when you start looking at these things, and then there's this misconception, Frank, specifically in where I come from, in the resource world, is about how China's the new superpower that's going to dominate everything. And, America's glory days are in the past, and, America's in this MMT. And I say that's complete nonsense. First of all, America's not at MMT. We're at FMC. It's called Fiscal Monetary Coordination. And guess what? It's not the first time it's happened either. Do you know what built America to the glory days of the 50s and 60s? It was FMC after World War II. And I break it down into all the patterns. What fueled the growth of the expansion to the West? Things that built like Hoover Dam and California and all that stuff. It was FMC. And this new industrial revolution that's going to come to America is going to be funded by low cost of capital from FMC. And I know this sounds really, let's all get along and happy dappy. No, man, it's coming from the guy who's the largest independent financier in the commodity sector. Frank, you went with me in, was it 2015, when I made that huge bet on a green energy company that was trading at a 90% discount from where it was trading 4 years earlier. And I was telling you why I was going to put up all this dough. And we look today, it was a six bagger. That's a huge score for a utility. And at the time, the pushback, you supported me in that, and people are like, oh, well, it's not economic. Okay, improvements in costs. The costs are down 90%, decade over decade. And it's going to continue to get cheaper. Yet, there's going to be a huge push into these sectors. And that's why I talk about this crossflation. As, we go electrify, copper is going to be required. But, there's going to be improvements to that. So this whole thesis that copper has to get to $10 to meet the demand. Once Goldman Sachs is jumping on something, Frank, the big money's been made. Okay. So that's all I'm just trying to warn people. And the book will push specifically resource investors. It'll push people's comfort level, but I prove it with a very factual, data-focused approach. And then, it's a big read. It's 450 pages. And my publisher was like, can you make it to 280 pages? I said, no. That's the beauty of being you already have a bestseller. You can kind of dictate terms with the publisher. This is my final book, and it's my framework. And the best part of it is, since I finished it in January, when you write something and you release it to the world, you're always wondering, geez, people are going to attack it. What could I be wrong and this and that? Everything that's coming out from not just the American administration, from the industry, from the unions, coming out of Japan, the EU, it's actually supporting all of these vectors, these catalysts that I've been talking about that are going to really result in the rise of America. The rise of America and the remaking of the world order is showing this evolution that is happening to capitalism. There's capitalism 2.0, which I call stakeholder capitalism. And I really break it all down, Frank, where, the capitalism that our parents knew or what we learned in school, that's over. And how to move forward and how to position yourself to make a fortune from this. That's essentially what I'm trying to do with this book.
It's interesting because when I first saw the title of this, I'm like, wow, you live in Canada, you're writing about America, right? Not that you don't know America, but now listening to you, it does put in perspective, because America is all we do is we complain a lot. We complain a lot. And you travel the world, I travel the world, you travel a lot more than me. and just to put things in perspective of how people get pissed off on their iPhones and their new cars and they're yelling in traffic and they hate everybody and hate everything. But coming from outside the U.S., actually, I think you can really see that perspective a lot better because you're in Canada and explain what's going on in Canada. Because the emails that I get, I mean, it seems like it's easier to go to North Korea than it would be to Canada right now because it's just so over the top, which is sad because I have a lot of friends there. I love speaking at conferences, even your conference is there, but it seems like it's still completely closed. Is that exaggeration? And that probably gives you a good perspective of a lot of great things that are going on in the U.S. compared to, other places that you've been and even live now, right?
So I've always been what I call an independent thinker. I don't do well in big groups because I'll listen to people's nonsense. And I remember in the summer, people are like, they were looking so down upon America. And I was like, what are you talking about? Like the vaccine and watch America on this. And we're seeing it in real time. And now the average Canadian has their tail between their legs and they're shocked about these useless bureaucrats and politicians that have disappointed them, The reality, Frank, is yes, you're right. Like, for what I had to go through to book my own plane and bring my geos and engineers to a project, like you're talking about like a $500,000 commitment for a project. Now, that specific project was worth it for me because I put up so much dough and I needed to do the due diligence where I felt comfortable, doing what I had to do with my team and everything there, that it was worth it for me. And it worked out great for my subscribers. We made a huge score. But I'm not going to do that for any project. Like you know that my travel schedule, and you'd never think twice about travel. Now it's got to be really worth it for me. And that in itself is actually a pretty good filter. I'm going to take that approach moving forward because Pareto's law is so true in investments where if you just focus on 4% of your stuff, you'll probably still get 2/3 of your returns. But you look at the innovations moving forward in America, you look at where I see things happening from an environmental standpoint, from a carbon credit standpoint, from going a carbon neutral, this coming war on climate. It's going to be declared a climate crisis. And whether you agree with it or not, there's going to be trillions of dollars set towards this. And it's going to be like nothing we have ever seen before. And that's where I keep talking about the forbidden chapter. It's going to shock you. My publisher was like, hey, we can't put this in print. Amazon's going to prevent this from people reading it. I expose what Amazon actually does. I expose Walmart. And is it a coincidence that some of America's wealthiest families, guys that have made hundreds of billions of dollars, are the largest facilitators of pollution from China? Those days are over. That's gone unchecked and it's done. And you're going to see politicians moving forward. Now, as you and I and investors listening to this, if you can position yourself, the gains that you're going to get on this are like unlike anything. And Frank, I've got my pulse on the resources and look at my track record. I would not be doing this if I didn't think it was an incredible opportunity. And then you get the second order effects. I truly believe that it's going to level the playing field with China. I do believe that you're going to have incredible benefits from an environmental standpoint. And this is a guy who waited 5 years before I invested into green energy companies till it made mathematical sense. That's where we are today in this game. So it's very different, Frank, but I'm quite proud of it.
Now, being in the resource sector, and I know you talk about Ross Beatty when you're talking about the green energy company, and it was interesting because I learned an incredible lesson there because I was scared of green energy back then because nobody could make money off of it. But what I realized is the people that can't make money off of it is because it costs a fortune and decade, if not decades, to actually build. But a lot of the infrastructure is in place. And once it's in place and you have this stuff, which we saw firsthand from some of these projects, the water's going to come out forever, right? You have wind forever, sun, when it's out, whatever. But it's just once you have the infrastructure built, it's constant. It's generating cash flow forever and ever and ever. And that's where Ross Beatty put that project. Where are you right now at green energy? We're seeing such a move in it. And now we've seen a lot of these names come down, rightly so. They're up 300, 400, 500% just, because Biden got elected. We see a massive push by all of corporate America, right? You look at presentations, I look at presentations, annual, quarterly, they all have like the ESG. This is what we do with ESG now. They include 4 or 5 pages on it. Where do you see in particular where you can make money in this sector? Because it seems like this is one sector that you've been paying close attention to.
Yeah, look, in March 21st of 2020, I did an emergency alert to my subscribers. I put up huge money personally and how to play it. And where I'm at, Frank, and history's proven that it was the right way to go about it. It's all about adjusting your risk. And we bought Brookfield, which is kind of like the Exxon of green energy. It's the world's largest green energy producer. And then in the US, the largest green energy producer in the US is NextEra. And these companies were huge wins for us, multi-baggers. And people will say, well, that I want a 10-bagger. Well, I wish you great luck. I'll put up my 10-bagger list to anybody in the business, but that's not how you do it. You have to look at your risk-adjusted return, and you could buy incredible value and you get 3-4 times your money. You sell half, pay your taxes, you still have half your original position, and it's all free. And these are dividends that I'm going to hold these stocks till my kids give it to their kids. And I just literally wrote a report last month on what exact price am I comfortable buying my next first tranche in specific green energy companies. It all comes down to one phrase in the green energy game, Frank: cost of capital. The bigger you are, like a Brookfield, their cost of capital is lower than, say, a startup. And this is something that I've been talking about for years and years. And maybe I don't do a good job explaining it because math is boring, or maybe I'm just boring. But the point is when you have a lower cost of capital, you said the key phrase. Most of these companies didn't make money, and because it was a higher cost. Today, in the right region, and just like anything, Frank, not every project is going to work. So you got to do your homework. This isn't high school investing where everyone just wants to get along. You got to make money doing this, or you don't survive. But you look at the cost of capital, and then you look at your returns. The oil guys can't compete with this. And then that's why you see the BPs and Exxons and Chevrons coming out and saying, okay, we want to get in this game, but their cost of capital is too high. The game has changed. That's when I wrote about GBOs, the green barrels of oil equivalent. And I explained this whole thesis back then in 2015 when I first published it, and I keep updating it all the time. The oil patch back in the day could have owned all of North America's green energy for less than 20% dilution. Now the game's turned upside down, where the green energy players can own the oil patch for very little dilution. And they can take all of the cash flow from barrels of dirty oil and fund more green energy. And the only way to control the destiny of oil is to own it. That's where I'm going to see things happening. And from an economic standpoint, remember, we talked about crossflation. You're going to see deflationary pressures on certain sectors, inflationary pressures on others, and the smart management team are going to take advantage. And it all comes down to cost of capital.
No, good points. Definitely makes sense. So I want to finish up here with some ideas, right? We know that everybody loves ideas, and they love having, because you usually have ideas. I know you're not into too many small cap. I don't know if you are in junior miners or not, or if there's large cap specific names that you like, but are there any names even in green energy space, or maybe even another commodity that you're looking at that we haven't talked about? Is palladium, if it's silver we haven't talked about, but something like that you really like, or you're looking at with a good management team or something?
Frank, mark my words on this, and I know exactly what your response is going to be. The biggest value commodity moving forward for the next 25 years is not going to be gold. It's not going to be Bitcoin. It's not going to be silver. It's going to be carbon credits. If you're a young person, if you're the Frank Curzio of 25 years ago, or the Marin Katusa 25 years ago, and you want to make a substantial net worth, start exploring on how to get into this game of carbon credits. This sector is going to dwarf oil. Oil is the biggest sector on the planet at $2.1 trillion a year. Okay, it's like 5% of the global GDP. Carbon credits. You look at what is happening so far. Of the 5,300 publicly listed North American and European companies with over $1 billion market cap, about just under 9% of them came out with a plan to offset their carbon footprint and a plan to come out with carbon neutral or net zero future by 2030 or 2050. That's less than 10% of the companies. Half of them have to report their S1, which is a scope 1. Frank, in 5 years, the regulators are going to make where your carbon footprint is a liability. And there's a huge growth of opportunity. Companies like Chevron, Shell, BP, Exxon, they're scrambling right now because their cost of capital is too high when the green bond market is the biggest growth, 60% year over year since 2013. And they know they have to go neutral. But how do you go neutral in this? It's outperforming Bitcoin. It's outperforming carbon credits. It's outperforming every commodity on the planet that's carbon credits. And it's going to continue to go higher. Why? Because it's the ultimate Giffen good. Giffen good is essentially it's non-replaceable. And as the price goes up, the demand for it goes up. There's an IPO coming out that I'm personally going to be the largest investor in, and some of the biggest names in the business, like Ross Beatty, they're participating in the IPO. You get a warrant. That's how you play the game, Frank. That's if you wanted something that no one's talking about, you're talking about a guy who is the largest gold and resource mining financier, independent financier in the world for this stuff. And I'm saying over here is where the puck is going, and that's where I'm putting substantial amount of money.
It's great stuff. And you say you're getting into an investment, but it is kind of hard. Is there specific companies? I know in my field, in security tokens and stuff, there's a couple coming out with carbon credits. I'm very familiar with it just from Al Gore and the amazing job he did, whether you like him or hate him, just building it up and telling you the world's going to end, which it should have ended by now based on his first presentation. The guy made an absolute fortune, right? You got to give it to him. So, is it coming to a point where there's going to be companies that you can invest in through this? Because right now,
I think in 12 to 18 months, it's such a new sector that there's so few companies in it. But I think in 12 to 24 months, you're going to have hundreds of Me Too companies. And again, be very wary when investment bankers and brokers are talking about the sector. You want to be the first in the room, and then you get the best terms when there's no one else in the room. That's how, usually I'm the smartest guy in the room when there's no one else in the room. And that's how I'm able to structure these deals. So that's how I'm going about it, Frank. And you're right. There's very few ways to do it. And that's music to my ears. In 24 months, it's going to be a sector in the market caps of hundreds of billions. And then you're going to be very selective. But we're talking about cash flow today. We're talking about, imagine you're able to buy a gold mine that is the largest gold mine in the world, and you're paying $100 per ounce gold, not $1,800, and it's permitted and it's built. It's just nobody knows about this company because they've been doing it privately. And remember that one lesson that a billionaire told you and I while we were on a helicopter. And I think you asked him, what is the number one lesson you've learned in your career? You've had win over win over win. He's made people billions of dollars. And what did he say, Frank? Own as much of the discovery or company you're working on because you can never get it back, right? That's the key. Own as much of it as you can. And that's where in this sector, that's what I'm doing.
No, that makes a lot of sense. Well, Marin, always great stuff. And if someone, and I remember that conversation too, Ross Beatty in the helicopter, I think, it was fantastic. I mean, we take a lot of helicopter rides together and I think about it. So hopefully they'll open up a little bit more soon, especially in Canada. But if someone wants to get in touch with you, find out more about you, how can they do that, buddy?
My Twitter, or just go to Katusa Research, and I've got tons of information there. And I really hope people read the book because it's something you'll never have read anywhere. And you know my style. I have to be unique. I will never write about something that other people are talking about because that's just noise. This is original thinking in a sector and sectors that are not being discussed, but there's being significant behind the scenes movement. And I really think it's going to challenge people's narrative that I think most people's narratives are wrong.
Well, I'm going to end on this because we do a video now, so a lot of people still listen to this on iTunes. And since you look so good with your beard, I wanted to say, since you wrote this book, I know you got the inside from this person probably, right? Since you look just like him. Who is Ted Cruz? You look like he's a good-looking guy. I'm not putting you. I like the gray beard. I like the new look, the black shirt. You look good, man. Seriously, you look like a good shape. Like I said earlier,
I thought you were going to say Tom Cruise or someone that Ted Cruz. Really?
No, that's all right. Tom Cruise, maybe next time. But listen,
I'm trying to go for the aging rock star look, not an aging politician.
It's great stuff, buddy. So listen, thank you so much.
You just ruined my day. I'm gonna go home and cry now.
If you're on video when you see it, people are definitely gonna agree. You look like it, and it's not bad. It's not compared to someone that's bad. It looks pretty funny though. Just the gray and the beard is awesome. So if you get a chance to watch this on Curzio Research YouTube page, definitely do it. And Marin, good luck with your book, The Rise in America: Remaking the World Order. I know it's gonna do great. So I'm really excited for you, man. I know how hard you worked on it, and I'm proud of you, man. That's a pretty big book, lots of pages, and I know it's going to do well, man.
Thank you.